Greetings, everybody. This is Jeff Scott. It is a little bit before noon on Sunday, September 8th, and most importantly, lots of big things on this weekend to be thankful for. First, happy birthday. Shout out to Ian, who turned 82 this week. And Ian Woodward really is probably the most instrumental guru in helping me trade and make money. For those like me that went to University of Michigan, it was a pretty good day yesterday on national TV, where the Wolverines have a tendency to disappoint. In front of the largest crowd ever at a live game, they beat Notre Dame handily. And it's also first week of the pro football season. So our wives, for those of us that are married and are not wives on the phone, probably not too happy today. Mine is getting used to finding what to do on Sundays for the next 4 or 5 months. I'm here for my usual show, and over the next hour we'll take a look from a top-down perspective. Now, reality is I'm top-down for the most part, but I'm also bottoms-up, so you'll see a little bit of both approaches, and you'll see how I use HGSI and other tools. So I always start with a very quick slide presentation. As I titled today, are we setting up for a year-end rally? Probably spelled rally wrong, or another September swoon to remember. And I think that's really a key point there, in that September is one of the, if not the worst months in the market. We've had a very nice start, first week, as you'll see. But it's typical for us to run up to the middle of the month, then start our pullback, perhaps rally into October, and then run into year-end. And so I'm concerned that the seasonals are against us. On the other hand, there was a lot of healing last week. This is my email address. Feel free to reach me, email me. I also have Jeffrey at highgrowthstockdoc.com. Disclaimers, education purposes only. I'm a doctor, not a broker, and I'm not affiliated officially with any software vendor or trading company. I use tools that I've paid for and that I use in my daily trading, and I'm not here to specifically promote any specific product. Speaking of products, I have a lot of things on my desktop, but reality is I need a real-time platform, of which I use Thinkorswim and TradeStation. I need something to analyze the market quickly, after hours, and during the market, which is HGSI. I use EdgeRate and ETF Bandit for some real-time scanning and backtesting. And seasonal analysis, I'm a big believer in seasonality, such as the old sell in May and go away, the why September is weak. And you can see seasonality not just from a very high-level view, but you can also see seasonality from the perspective of a sector group and stock. And then I'm a big fan of Ian and Ron, Woodward and Brown Investing, and I subscribe and pay for most of their tools that they do, many of which are also free. As I always like to mention, one of the things that Ian taught me 20 years ago or more was to be your own guru and not rely on other folks. So I've learned from masters, and then I put it together in my own style. You don't have to like my style. You can do your own style. You should do your own style. But I just like to share my roots. It started with William O'Neill, How to Make Money in Stocks. Ian and Ron, their blend of Can't Slim on steroids. Morales and Katcher, Can't Slim on methamphetamines. The second book, Trading in the Cockpit, also highly recommended. Bigelow is my candlestick guru. Van Tharp for position sizing and money management. Alexander Elder, among others. These are some of the websites I use. I use a lot of the tools from these folks. From Morales and Katcher, I'll talk about pocket pivots and viable gap ups. From Ian and Ron, Kahunas, Eurekas, Bongos, Elder, Force Index, impulse indicators, etc. I show this frequently because where we are in this cycle tells me what I need to do, and every time I think we're rolling over, we take another leg up. So I think we continue to live in stage 3 of uncertainty, and we don't know if this market's going to break higher or lower. I think the odds are increasingly favoring a break lower, but you've got to trade the market we have, not the one that the odds favor. Don't fight the trend. In an uptrend, you can buy on dips. pretty much if you buy early enough, didn't matter where you bought, you just don't want to be the last one buying. In a downtrend, there's no place to buy, but you short on retracements. Again, early enough, you short wherever you want, but as you get closer to the end, you don't want to be the last person selling. And where we're sitting now, there's a lot of this Darvas box action where you want to sell resistance, buy support, and look for breakouts and breakdowns. So the way I do my weekend review, it really starts bottoms up with a top-down flare. And by saying that, I rank things, and group rank is an important part of my ranking module. And when I do my scans, group rank is an important part. But I start with a large list of stocks. I pare it down to about 500 charts that I look at. And these are fundamentally strong charts, and I try and put those that look like they're attractive into certain categories that I will look at further. I can tell you that last week was a great week for high growth stock type investors, and I'll show you the data to support that in a few moments. Interest sensitive stocks, I talked about this 2 or 3 weeks ago that I thought I saw some changes. Lots of REITs in that top 500, some utilities, and surprisingly a bunch of bond funds which have been hammered. Is it time for home builder ping pong? Last year in November, I made a lot of money after I went to the Traders Expo, and my buddy George Lee said to me, you know, was I looking at home builders, and I had just bought a couple, and that sort of confirmed we're not quite in November yet, but there's some bottom fishing opportunities in home builders, and I call it ping pong when some of the others like Lumber Liquidators that's had a nice run, EXP, a cement player, which has pulled back hard, looks like it might be setting up to run, Mohawk Carpeting, mortgage servicers such as OCN, WA, I think C, Welser Asset Corporation, it might be AL, and are some of the ones that I like there. Again, I can't spell, so I'll just fix that here so I don't feel stupid. The other thing that I saw that frankly that I liked, and again, it would be a bottom fisher and not a high growth stock, was Annaly Mortgage. I mean, only if you like a 13% dividend, you might want to take a look at that one. Maybe I'll take a look at that sometime as we go through. And then who wins if oil stays high? I think we're seeing some of the better known shippers such as Diana, Dry Ships, Eagle going up as some of the commodities increase. But what about those that carry oil themselves? Some pay a pretty nice dividend. We'll look perhaps at a couple of those. And the exploration companies, especially some of the cheap ones, look pretty impressive. Kodak, KOG, was one that I liked. Everybody knows that I'm a big fan of high growth stock software. And if I just run to the website real quick, I wanted to point out a couple of things to you. So the first thing is I'm not logging in. I'm looking just at what you would see, highgrowthstock.com, free 30-day trial without a credit card. This data can be used in many other services by exporting to Metastock. It's used directly by EdgeRater. Under investing strategies, you have Woodward & Brown Services, where you get a lot of, I'll just take a look here. You can see the different things that they offer you, some of which are free, including Ron's videos, Ian's blog. I subscribe for a daily report for Ron, and then they also have a series of videos and other benefits. If you go down to here, you can get Ian's blog, Ron, this is his posting, I post as well. If you have the software, make sure you go to the add-ons and you install both these files so that you have the same things to look at that I do. Coming up soon is a seminar, and I actually pay fully to come, and I've been to the last, God knows how many, the last decade, twice a year. And it's coming up shortly in lovely Palos Verdes, California. I live in Florida now. Palos Verdes, California. I only wish my wife would be so much happier with me if it was here. October 26th to the 28th in Palos Verdes. It's $12.75. You get fed and watered for pretty much the entire time except for Sunday evening. And it is a bargain. There's a couple of other events that are occurring. The weekend before, Greg Mills is doing his meeting in Anaheim that I'll be speaking at with George Lee, among some other special guests. And in November, Derek Pilcher is doing a Vegas program where I'll be presenting HGSI at, and Chris White of EdgeRater will be at most of these as well. So enough talking. Let's take a look at the week that was. So very quickly, I'll look at TradeStation, and within TradeStation, I'm going to look at the Elder Impulse Indicator and give me a sense if it's okay to be buying stocks right now. So this is the NASDAQ on the daily, the weekly, and the monthly. As you could see, we are still negative on the MACD histogram, even though we're trying to rally in the market. And I've been concerned about divergence. Higher high here did not lead to a higher high on the MACD, and that divergence remains as a concern that I would have. However, we have had a nice rally from red to blue up to green, and we know when it's green on the impulse indicator, we have the opportunity of buying or holding. We shouldn't be selling. The weekly is blue, the monthly is green, so the NASDAQ has had a nice rally this week. We'll talk more about the rally shortly, and it's currently on an okay to buy signal. The Dow, a deeper pullback, and it's trying to rally. It's blue. Blue is sort of an intermediate, which you can pretty much buy, hold, or sell. It too had some divergences on the way up. Higher here. Did not even go positive on the MACD histogram, and it did get a lower low on the MACD histogram, although it didn't make a lower low in price, but no divergence on the bottom, divergence on the top. The weekly is still red, and you'll see when we look at HGSI that the Dow is weaker than the NASDAQ. I said it was a good week for growth stocks, the NASDAQ being a source of those, but blue is better than red. Big stocks, S&P 500. Again, these are from when I was talking about that divergence. Green, blue, and blue, stronger than the Dow, perhaps not quite as strong as the NASDAQ. So you have at least a okay to buy on the indices. Let's take a look at the week that we had. So I like to do a lot of reviews to help me understand what part of the market is working. I also like to look at my past, which was the stocks I was holding at the market close last week. I like to look at what I might have bought, which was the buy list that I had, and then I look at a lot of other watch lists. I'm the king of watch lists, which whether it's good or bad, just to give you an idea of what kind of watch list I'm talking about. These are all watch lists that I accumulate during the week, and when I build that list of stocks, it's about 500 stocks. This is where they come from. I look at things that came out of the program. These are some pre-screened Bible gap up and pocket pivots. Within MarketSmith, I look at things such as the MarketSmith Growth 250. I look at some of their lists from MarketSmith, top-rated IPOs, top-rated stocks. Within IBD, I look at the 50, the Weekend Review, the Big Cap 20, Cancel and Select, New America. The screens of the day come out daily in the Investor's Business Daily. Within TradeStation, I run a number of scans looking for Bible gap ups, green candle lows, red candle highs, etc. And within Metastock, I've been playing with a Dr. Stocks plugin, an ETS plugin, and their RMO ATM plugin. And what I try and do is I try to find the best of the best from each of those scans and ultimately drop them into a couple of lists, into my consolidated buys list, which this week broke over 1,000, which showed a broadening of the rally. Last week was about 700. I run these through a number of automated trading systems looking for potential buys, and then I take the top 15 from every one of these lists, throw it into my top 15 from buys list, which was 304 this time, and add to this the MarketSmith 250 and a couple of other scans. And that's the list I talked about, which was about the 500 stocks. I call that my weekend chart review bulls, and there were 500 this week, which was a big number. One way that I take groups in and out is I monitor their performance on a weekly basis. So the first thing I do, this is called a group performance analysis. I run it from end of day Friday because I'm making my picks based upon how they did last week to end of day Friday this week. I also run it versus the open. There was a big gap up at the open this week, so you needed to be in a lot of these things last week to get the benefits this week. But it was just a muted response. It was still the same directionality. So I said it was a good week for stocks or growth stocks. So let me show you the data to support that. The first thing is black is good and red is bad. So these are all growth stock type lists, and you could see that very few things traded down. If I look at the S&P 500, it was up from Friday to Friday, close to close, 1.36%. That's a huge move in the S&P 500, and considering the discussions in the market about the strength and weakness, et cetera, that's a huge move, and we'll see how the other indices did in a little bit for September. Anytime that's a big move. Now, why did I say growth stocks were working? HGS 100 was up 2.09%. So this is just a scan out of HGSI. It was such a weak market the week before that there was only 75 stocks made the scan, of which almost 75% were positive. The IBD 50, actively managed by Investors Business Daily, was up 2.42. So these are my growth stock signals, and you could see that they certainly had a good week. Now, my stocks, if I had kept the stocks I had Friday all week long, 70% up for 2.83% gain. That's a pretty impressive gain by any imagination. So as I said, I had a good week last week. Now, what's interesting is the stocks that I picked that I thought looked good for buying, they were up nearly 4%, 85% up. So, I mean, I think that I've learned how to trade a little bit, how to pick stocks. I love stock picker markets. I ain't that good. And when you see numbers like that, it just tells you that the types of stocks that I look at were in vogue. Now, if I look at the top, I see that a couple of scans that are given every day that require absolutely no time and work really did well. The best stocks under $10 were up 7.32% with 80% winners. The Bible gap-ups, as calculated by the program, they found 6, were up 4.67% Friday to Friday. These are a couple of my searches, pullbacks and breakouts. Best of Woodward and Brown was up 4.10%. The impact of the Sprinter filter, which I've showed you our ranking, is I do a large list in TradeStation. Let me show you what I'm talking about. I scan on a daily basis. And so in TradeStation, I have about 900 stocks listed here. There's a 1,000 stock limit. And I'm scanning the day, and here I'm searching on Bible gap-ups. And you can see how many Bible gap-ups I picked up in TradeStation this week, or on Friday rather. And so this is a list that I like. Now, if I take that unfiltered list, which are large stocks, so more than $5 and lots of volume, plus the S&P 500 stocks, plus my top 15 stocks, they were up 1.85%. So they did well compared to the S&P 500. And that's on, as I said, about 900 stocks. If I just filter them out so that I only look at the Sprinter combo, I was able to take the really almost double, up to 3.4%. Sprinters in a bull, strong market will find the best stocks, and we'll come back to sprinters. So any way you want to look at it, this was an incredibly strong market. Now, when you run this program, So Fun, that was one of our key buys last week, was up 18% on the week. Talked about that. this was the best stocks under 10. And, you know, some of these are probably stocks that you might not look at, but everything here looks like they're $2.50 and above. The start of the week over $3. And so I'll look at this again before we close what they are for this week. But if you are looking for cheap stocks, they certainly were in vogue. And I haven't tracked that historically. I'm going to continue to track that. I look at Ian's buckets, and I look to see at the 50-50 line, do I have more stocks below the midline on the Bollinger Bands or above? Now I have a more below, which is bearish, but this was at 80% coming back to 60. So we're coming more to a place where we could go either way. And you could also see that I had even more stocks above the upper Bollinger than I have below, although the predominant number of stocks are trading below the Bollinger Band. So I don't see oversold or overbought here. I see a market that could go either way. I like to look for Hindenburgs. And just a food for thought here. When you see a series of Hindenburgs, you have to be concerned about a major pullback. I thought we were having a pullback. It looks like that pullback resolved. I'm going to be watching closely to see if we get more Hindenburgs. This is a well-described in the literature indicator. It appears associated with major tops. It's got maybe a 25 or 30% success rate, but 100% of major tops have these things associated with them. If I go back to the last major top in 2007, and I remember Ian used to say it'd be a long time, perhaps, until we saw another, do I not have it in here? All right, I don't have it. Before we saw another set of Hindenburgs, and he was right. But in the major top that we actually had a double top. We had a double top, and 2 months later we had another series of Hindenburgs set up a head and shoulders, and the market collapsed from that point. So if I start to see more of these in September, I'm going to be concerned. I think of Hindenburgs not just as a very negative finding, but to be an indicator that shows me when the pros are selling and the amateurs like me are buying. Now I'd like to jump into HGSI and start my top-down review. I'm at 24 minutes already, but I mean, I think the stuff that I showed you about the market to me is very important. Probably need more memory in this machine, but basically, when I open up HGSI, I have three groups, the reference groups, which are all the things that you wouldn't want to touch, splits, group membership, in and out of different sectors, what the ETFs contain. It's done automated by the group. The smart groups are views, which is a combination of a filter and a ranking module, and the best of the best by certain criteria, long and short, that are done for you every weekend. So for example, here is that best stocks under $10, and these are the stocks that showed up. And I could tell you that a lot of these stocks are big-time movers that showed up. And you know, I'm going to finish by looking at this. I hope I remember that I promised you that. I like to start, though, by understanding the market. So let's go into Woodward & Brown user groups, the latest version, Major Markets Plus, top-down view, and see where the strength is and the weakness. Search by raw combo. So you can see oil has been leading. Stocks were on the bottom last week, and they're all over the place. The smaller guys, NYC has big, small, little. The small cap 600 moved up to the top. S&P 100 and 500 are down towards the bottom. If you look at 5-day performance, you can see the losers were volatility, Treasury bond iShares, gasoline, which means refiners. Gold had a tough week. Silver not as tough. If you look at the last day of the market, silver and gold had a good day, and dollar showed some weakness that did transports. The weakness or the strength in the market over the last 5 days was oil, the NYC composite, and then the big stocks. So the big stocks, although they were weak on Friday, led the market this week. So I'd like to look at a bunch of charts. So let's start going very quickly here. We wanted to open up the S&P 500, but I think I opened up something else. because of TradeStation running in the background, it slows things down. We'll see how it goes. I don't know what I hit there. Let me close that down because that's not what I want. I'm going to shut down TradeStation so I don't eat up my memory. All right. So let's start with the S&P 500 and take a look at the chart. Here we go. And I don't really need the fundamentals, so I'm going to close the fundamental part. So what do I see? And let's bring in some more data. I see a market that's been since June, really. Let's go back even further. So June, it bounced off the 200. November, it bounced off the 200. Now it's been living on the 50. And really going back to October of 11, so almost 2 years, we've had a very nice uptrend. Just for sake of arguments, if we go a little further back, see we had a run-up from August of 10, peaked, buy and sell in May and go away, pull back down into October of 11, has been going up ever since. Here we go. Here's the low in March of 9, series of run-ups. Here's that pullback in October of 11, and we've been off to the races ever since. And this was the last big pullback that we had, which was in October of 12. Started in September of 12. So, you know, if history repeats itself, then we are due another pullback. And just to look at that pullback, and by the way, I'm a big believer that history repeats itself. From September of 12, from its high to the low of the market, was about 8.8%. So that was the last major pullback that we've seen. And so clearly we are overdue. We've had a large number, as I've shown you in the various weeks that I've done this, of 3%. So I look at the S&P 500. It just got done with one of those pullbacks. I'm not as good at this as Ron, as good as Ron. 4.7%. Struggling now to get above the 50-day moving average, 50 in blue, green is 17, magenta is the 8-day exponential, red is the 200-day. Everything's red up there, so still weak, but trending back up. We'll see if that 200-day or that 50-day moving average becomes resistance, and we pull back down, or we can get back above it. If we look at the Dow, those 30 stocks that we care so much about, you see a lot weaker pattern with a lot deeper pullback this time, closer to 6% nearly pullback. It's got a ways to go to get back to the 50. So I look at the Dow and I'm much less impressed from power. I look at the NASDAQ. So small stocks have been outperforming, and we should see in the NASDAQ, which we will, that it is the only one thus far that's above the 50-day moving average. Had a pocket pivot for whatever it's worth on Friday, which is kind of, it was up just a teeny bit, up a little bit on Friday, but had decent volume, which is surprising considering what we had, which was Rosh Hashanah, the Jewish New Year. I like to look at the NYSE, and you saw it was a leader this week because it includes big, small, little, and a lot of stocks. It's what we calculate the Hindenburg from. And you can see it's really at a crossroads at that 50-day moving average. Oil, the leader of the week. You can see why with all the strife in Syria. A gap up on Friday, setting multi-month, if not longer, highs on the USO. Let's take a look at weekly. You can see you've got to get back until February of 2012 to get to the next the next high, and we do have perhaps some resistance a little bit closer to 40 as well. So gold has had black gold, oil's had a big run up here, and a lot of it's a premium probably in place with what's going on in Syria. I see a kahuna on giant volume and a pocket pivot. Everything's green here on the momentum indicators. Gold and silver pull back to the 17-day moving average on gold. Still have to get above that 200 to make me a believer, although there's still money to be made if it continues up there. And the same thing with silver, huge pullbacks now perhaps can be bouncing between the 17 and the 200-day moving average. Volatility fell this week after it was trying to make a comeback. And one could see on the VIX that it got up to a little bit less than 18 and has pulled back here. We'll see if it can rally and go back to new highs, or is the VIX going to pull back to complacency. Certainly it's a lot different than when it was 12, and part of why I believe that we're potentially setting up for some type of volatility and pullback in the middle to late part of September. The dollar, again, like the VIX, tried to rally, pulled back to the 200-day moving average. A weak dollar is good for commodity stocks and sometimes for the market as a whole. Treasury bonds, certainly nothing here to get excited about. Some of the bond funds actually looked a little bit more interesting. Maybe making lower lows, we'll see. So as I look at the market, that gives me a sense. So, I'm not real bullish from the indices, although it was a great week for growth stocks. To me, it's really a time of indecision. We may continue to run up. We also may drop from here. So I'm not being very helpful, and I apologize for that. Industry groups, you see we have 146 of them. If I look at Force Up, last week I think there were 10 or 11, and this week there are 67. So further evidence of some healing underneath the indices with the industry groups improving. I just want to jump up and look at one quick thing before I go into the industry groups. I want to look at the S&P 1500 and look at some of the I views, the letter I, that Ian and Ron have used for so long that I think are great for looking at the internals of the market. Specifically, well, here's one that looks at, you can see the bongos are negative. Forces turned positive last week, which is bullish, but you still have the red above the green on the directional movement, but much closer, certainly red coming down, the green going up. If I look at new lows, new highs, I could see that we're back above the moving average. Highs versus highs are above the lows, but more importantly, the cumulative is above the 13-day moving average, and you can see we're green here. If we look at accumulation distribution, we could see that the E's and the A's and the B's have turned up. The D's and the E's have turned down, so that's a positive sign as well. If we look at, here's E's down, A's up, and you can see that the A's and B's are crossing above their 10-day moving average, which is a positive sign as well. So the market internals suggesting that perhaps we're also starting to heal a little bit, but there's still a long ways to go. So what I like to do is take a look at the top 10 and see if any stocks pop out. And this is top down, looking at the market first, the top groups and sectors, and let's look at some of the stocks. So let's start with internet retail. Facebook, for all the naysayers, Facebook's become a nice story. It's taken out, or it's getting close to its all-time highs after the IPO. In fact, let's take a look at that real quick. The IPO high was about 45. We are almost there right now. But Facebook has had a very nice recovery as they I guess, have shown the naysayers that they do have a good mobile story. You know, it's probably viable from a long-term perspective. I'd rather have bought it down here when it broke out. Let's put back its fundamentals. It makes money. It's got profound earnings per share growth. Everything's green. Pocket pivot on Friday. Very nice looking chart. Yelp is another one that I find interesting. I don't love its earnings per share growth. I love the chart pattern of pullback to the 17-day, and then a breakout here with a couple kahunas, big volume, and a viable gap up. So if you follow Morales and Catcher, you know how to play viable gap ups. If you don't, read their book. Amazon.com, pretty deep pullback, pocket pivot, a couple kahunas, broke above the 50. That's probably telling me something here. A couple kahunas, a pocket pivot, and a DI crossover. Maybe time to start playing with some Amazon. All right. So that's the leading group right now in the last couple of days. Biotech, one of my favorite groups. So area, I can't say redemption, but I did make a bad call on this one when it pulled back to about 19.5. When their key drug got approved, I said it was a great buying opportunity, and it's basically taken the stock over a year to make me look good. But it's had some interesting data on pipeline products, as well as their original drug. Everything turned green, viable gap up, great management team. Not going to make money for a while, so now you're playing in the land of stories. But some of these story stocks do very, very well. So area looks interesting. A little bit later than I thought it would happen, and anybody that held on to it for my call, good for you. Aztecs gave us some interesting movements, and then it announced that it was being taken out on Friday. So you wonder what the insiders were telling their friends here, because the volume went up before the takeover was announced. Celgene, probably getting ready to take my first profit since I first started talking about it. I've got a massive position in Celgene, and when it ran up to 130 here, it gapped up. Its history had been to pull back, and so what I did was I wrote some 150 calls and sold some puts. So the puts expired worthless, and I either will have to buy my calls back or I'll have half my position taken away at 150. Probably will have it taken away. My portfolio is too heavy in Celgene. Lower left, upper right, great stock. My favorite biotech for quite some time, as everybody knows. BioMarin, again, one of these not making money, good story, drug development plays, thought to be a high likelihood for acquisition target. You saw that news caused a bunch of pocket pivots this week. Others of my favorites here. Insight's an interesting story. Another one where their key drug was found to be active, in this one in pancreatic cancer. And early data, again, another great management team, some folks that used to be in charge at Amgen in their glory days. And you can see the stock pull back here to the 8-day exponential after the viable gap up. It's still valid by viable gap up rules, and might be one to watch as well. NPS Pharmaceuticals is one that I'm an owner of that's been a very nice run here. It doesn't make much money yet, which is concerning. So they've got some things that they sell, but also about a pipeline. See some revenue. My favorite, probably the next 12 to 24 months, the next Celgene I've been calling for some time has been Gilead. Getting close to that 50, probably give me another opportunity to buy. Don't like its short-term earnings prospects, but it will be a leader in hepatitis C as it's been in AIDS, and is now trying to get into oncology as well. Sorry about that. A lot of good stocks in here, a lot of my favorites. Don't know much about this stock here, Repligen, except I love its pattern. So, sorry, that's my son who tried my cell phone, now he's calling the handset. You can see a pullback to the 50 and green candle low here. Stocks like to bounce from this point, so technically I like the picture here. I don't like the fundamentals. I don't know enough about the company. So a lot to like in biotech. No surprise, it's number 2 on the list. Application software. Some of these make more sense to me than others, but you can see the green 2-day forces, big numbers there. That's why it's on the list. And the first one is Infoblox. Now, Infoblox has been a momentum darling. It has to do with communications. It's a U.S., not a Chinese company. Big Bible gap up on Friday, a series of big kahunas here, huge volume on Friday. Certainly a intriguing looking picture there. I'm not going to go back and forth to daily graphs because it takes too much time and eats up my bandwidth. But this is a stock that is projected in 2014 to make 50 cents, which would be 38% year-over-year growth. It has a multiple of 96. To me, it's a little bit expensive, but it's one of the momentum players, and you could say LinkedIn was expensive too. Kangzong Corporation, I believe that this is one of the Chinese stocks. There have been a lot of Chinese stocks. Chinese Interactive Entertainment Media and Interactive Services projected 2014 about 60 cents, which is 29% year-over-year growth. Trades at a multiple of 15. So if they can expand its multiple, that might be impressive. Again, the volume, the growth, the kahunas, interesting looking stock. On Gil and Chris's weekly webinar, somebody asked about why so many Chinese stocks. And Gil gave one answer, I would say, because that's what's working now. And there's a lot of impressive looking Chinese stocks. Workaday going sideways. Multiple edges coming together, Pocket Pivot, Kahuna, all green, looks impressive, but doesn't make any money. It's a very nice product. Nuance perhaps has a play with the new Apple phones. Carl Icahn has taken a position in it, had lousy numbers, but actually traded up. It's opened down and then traded up on earnings. The Kahuna on Friday, it's got some major resistance at that 200-day moving average above it. So these certainly have been some leader stocks as well. Next group down, we're at 45 minutes, or semiconductors, changed index group. I'll look at the first 2 and then number 5. Micron Technology has been a big earnings performer. It's also benefited from the fact that there's been a reduction in DRAM manufacturing, and you could see it had a pocket pivot on Wednesday and a big move up with the Bible gap up. And it looks to be running again. Great earnings per share growth. Ambarella, I like this one, also a Bible gap up. This one, AMDA, is a young stock as far as a recent IPO. Looks like it came out in October of last year. And looking in 2014, it'll make 93 cents. So it trades at a PE of about 16 right now. Bible gap up, got above the 50-day moving average. If this thing trades up on Monday, this might be one to watch and one to own. HiMax is an interesting story. HiMax had a huge move this week. HiMax is a big manufacturer involved in the Google Glass, and Google not too long ago did a big investment in them, and I was kind of surprised by the pullback. I've got a fairly substantial position that I decided to hold on. You can see a couple Bible gap ups this week, and we shall see what happens there. Back. Home builders, I mentioned something's going on here. These are all beaten up stocks, and I guess the big question here has to do with whether home builders are back or not, and a lot's going to depend on whether interest rates fall. I heard some pundits predicting that interest rates will actually come down when the Feds announce that they're going to reduce some of their easing, and if that's the case, then I expect the home builders, and that's why I mentioned them early on, to perhaps show some benefit. So this is typical. Here's Lennar. It's a bottom fish. Maybe it's finding some support down here. Pocket pivot, Kahuna on Friday. I like to see it get above the 50, and then maybe it can run up to the 200. Certainly early here. Ryland, great earnings per share growth still left in the stock. Similar pattern, pull back pretty deep. Kahuna on Friday. Got to get above that 50 and 200 to make sense to me. D.H. Horton makes money. Similar pattern without the Kahuna. So these are showing some improvement, and you can see the forces up high. They've got great volume, at least in the leaders. Remains to be seen whether this group is turning around or not. I mentioned oil and gas exploration. These are little guys up top. Whereas they used to be little guys. Here's Oasis. I think I talked about this 2 weeks ago. Had a 10% run this week. Probably has more to go. It makes money. Had a Bible gap up on Friday, a Kahuna on Thursday, which I picked up intraday. Lots of volume, everything turning green. It'll make almost $3 in 2013. It trades at a multiple of 19. Do the math. That's got another 15 points in it. Like this one a lot. Don't know Goodrich Petroleum, but I like the chart. Nice move up here. I don't like the earnings, so I'd probably skip it. I mentioned Kodak Oil. A lot of people talk about this on CNBC. It's got earnings coming into the stock. It's struggled with that 10 range for a long time. And if it can get above 1090, then it's in blue sky territory. It's targeted to make 66 cents in 13 and $1 in 14, has a multiple of 20. So here's a stock that could be at $13, $14 short term and $20 in a year. And I bought some of this on this recent move up. Gulfport, beautiful picture, multiple pocket pivots, all green. Don't like the earnings per share growth. Magnum Hunter Resource, a cheap stock, but beautiful picture here. Again, don't like the earnings per share growth, like the chart. If you like earnings per share growth, take a look at S&M. Glardy, no jokes, but look at the earnings per share growth, putting in a softer bottom, pocket pivots here. It's above the 405, multiple kahunas. This might be one to take a look at as well. That high-priced oil ultimately is going to reflect well on the U.S. Producers. Internet software and services, can you say LinkedIn? I mean, I'm not going to go much further down the list. I'll look at a couple of those that are the momentum plays that everybody's talking about. You know, pocket pivots on Friday, everything is green. Earnings coming in, still trades at an astronomical multiple of over 500, but is a leader of our generation, but no question about it. Google, pull back, probably an interesting time to buy if it can break above that 50-day moving average. Splunk, one of the favorites of the momentum players. Shooting star on Friday, so I'd be a little bit careful, but also on a pocket pivot, had a Bible gap up earlier in the week. Doesn't make money there, and let's just take a look at SPLK. Projected to break even in 2014, so not a lot of earnings to power that, pure momentum. What else is working? Obviously, there's a lot of other interesting stocks on these lists. Communication equipment. A lot of this is drawn because of Nokia's, I don't know if it's an acquisition by Microsoft or they're just selling, I think, parts of their business around phones and devices to Microsoft. And you can see its big move up it had earlier in the week. Ciena, Finisar also looking interesting. Ciena's looked interesting for a while. Great earnings per share growth. Optical and networking equipment stocks have done very well. The one in this sector that I own is a small stock, which is AFOP. Which had a tough week, but had a very nice run up, has great earnings per share growth. All right. I thought Finisar looked good as well. Diversified banks, a lot of foreign banks. You see there's some big moves last week. I don't know enough about these, but perhaps they're going up for the same reason home builders went up and the same reason that emerging markets went up, where there's less worry about the impact of tapering, or maybe the rest of the world is actually picking up. This is very indicative. They're gappy because they're ADRs. And are they putting in bottoms here with kahunas and volume coming in, or are they going to bounce back down off the 50s? I don't play them. I don't know them. Last of the top 10 groups was semiconductor equipment. This is what drove it. LTX Credence, don't know this company from Adam. It's a cheap stock, $5.79. And probably worth reading about, right up to resistance at the 200-day moving average. A kahuna, tons of volume. Don't know if this is an acquisition. On the dark side or the downside, you can see not a whole lot of groups. Oops, sorry about that. Here's the groups. Tesla pulled back a little bit this week, pulling back the automobile manufacturers. Big Pharma had a tough week. And airlines had a tough week, but I really think that Delta is going to have a good week. Delta getting, I don't know if it's the mid caps or the large caps, but I think it got added to the S&P 500 Friday was an announcement. These guys sold off because of the judge saying no to the US Air American merger. Not the judge, or the FTC saying they were going to challenge it. I still think that merger occurs, and I think it's good for all the airline stocks. Interesting that they've gone up despite super high oil, and you can see it's pulled back to a squeeze of the 50-17 and the 8-day moving average, and it traded up after hours nearly a buck. So I'm pretty optimistic about Delta this week. So that is the end of my top-down approach. Let me do a couple of things else that I do. People know I do a group inclusion report. I'm not going to run it. I'm just going to show you what I saw this week. And these were the stocks that came to the top. Webcom, talked about that several times. LinkedIn, Infoblox, SOU Fund, Evercore, Facebook, Yandex. I import those into HGSI. I looked at the top 30 and I scanned through them. Let's see if there's anything. Just take a look at that list for you. This was the list we looked at last week for the top 10, or top 30 rather. And if you look at this list, you could see that over 5 days, the big winner was SoFund Holdings. OCN was up 8%, Qualys 7.4, Yandex up 7, Facebook up 6.5. The loser was Green Mountain Coffee. 11 losers, 19 winners. This group did very well for the week. So the top 30 for this week are right here. And you could see SoFund, Infoblox, we talked about, Yelp, Vita, here's that Oasis, Owen. Some of the casino stocks made it. MPEL and Bally, here's that AFOP I liked. Grand Canyon Education, these guys make me nervous, at least the group makes me nervous. Jazz and Questcor, two drugs with boring products and great pricing opportunities. Qihu looks interesting in the system software group. This one actually has earnings per share growth that suggest a higher price in the future. And you could see lower left, upper right, certainly extended. I'd look to buy this one on a pullback. So these are some of the stocks that I found with my group inclusion filter. Coors sort of bucking the trend on the retailers. My sprinters group, if I look at all securities, run sprinters, you can see I got 107. This would be a great place to fish from. Many of the stocks we've talked about already are listed here. There are a large number of Chinese stocks. eHouse, Phoenix, Sino Global, China Biologics. Here's that Repligen I mentioned. These are stocks that are fundamentally and technically extremely strong. My buy list for this week, not that it means they're good stocks or anything, but the ones that I'm looking at is right here. So let me see if there's anything last things to talk about. So I mentioned Annaly Capital Management. I mean, I don't know if I would really be recommending this for anybody with a thin stomach. However, where'd it go? Come back. You can see a really profound pullback, a kahuna pocket pivot, got above the 50. So I set my buy stop probably above the high of its day. My close stop below the low where it opened the previous day or the low of the previous day. So I'm not going to give it much room. But 13.6% dividend yield. This is one that I might buy and sell calls against it to protect me and sell calls out of the money and see if I can't ride the stock back up to 14 and take some of that dividend off the table. I like that picture a lot. eHouse China. Look at a couple of the Chinese stocks that I think made it to my list today. And you're going to see certain things that are in common with these stocks. First thing is they make money. So eHouse China is a cheap stock. First phase breakout. Second stage, I think the stock runs again. Great volume on Friday. Everything is turned green. I bought on Friday or Thursday, I bought some Feng. And you can see it had a viable gap up on Friday. I bought it on Thursday. Huge volume coming into this stock. This one looks like it's taking off. Hold on a second. Which other one did I want to show you that was Chinese? We already looked at Qihu, which I don't believe is Chinese. It certainly is a very attractive stock from my perspective. Dips. This one had great earnings but missed projections, had a pullback. I think this one runs again. It's a interesting online retailer in China that has, you know, flashing blue light Kmart blowout specials. And you can see the earnings per share growth in this are just unbelievable. Nice chance to pick it up on a pullback. Other stocks of note, GasLog is a shipper of liquid nitrogen gas. It's in an uptrend, although loose. Why I like this one versus some of the others in its category, 3% dividend yield and great earnings per share coming into the stock. The other shipper that I picked, and I do think shippers look good. Let's see if I can find the other shipper. And again, I don't know Scorpio tankers from Adam, but it's in an uptrend, pullback, broke above the 50, on a kahuna DI crossover, and it makes money. I know a lot of people, and I've been in and out of it because technically it's been strong, have been into DSX, and the dry bulk shipping index has been up, and you can see that Diana is breaking out. That's a great stock, but I don't like the earnings per share growth. All right, what else do I want to look at? I think I've looked at enough. Another way that I do it with my buy list, and I'll just put it on this so you can pause it if you want to write any of these down for any silly reason, is I put my buy list and I rank them. I got one more thing I want to do. I rank them by, these are stocks that I like, the Bible gap ups, breakouts with great earnings. We looked at KOG, take a look at OCN, I looked at EJ. Leaders that have had a great run might be gone, but www is perhaps my favorite one there. Facebook we looked at. MPL from a gaming stock. Pullbacks ready to run. These are stocks that have pulled back from their highs but have given me a signal, whether it's a candlestick pattern, volume, a pocket pivot, a Bible gap up, a kahuna that they want to run again. And you'll notice there's a lot of housing-related things here. Primoris, Eagle Materials of cement, Mohawk, the carpeting, Lennox, the appliances, all made the list here as pullbacks ready to run. Pullbacks waiting on a signal. These will be stocks that have had a nice run that have pulled back. I'd like to see some more evidence that they're going to take off. New Skin makes me nervous. It's like an Herbalife for skin products and other pharmaceutical preparations. Bottom fishing was Ryland Group. Fortune brand security has to do with home building. They provide a lot of the security and alarm systems. And then my special situation of Annaly. Last minute, last thing I want to do, as I'm a little bit over an hour now, which is sort of my speaking limit, and we got 7 minutes before before football kicks off. Let's just take a quick look at and run through that smart group. And I don't usually buy cheap stocks, but I got to tell you that search best stocks under 10. I'm going to go through these super fast and then say goodbye. And mostly because of the performance of this sector last week. So eHouse China was a big winner last week. And we already talked about it. I can skip it. Support.com, I didn't like this one. Doesn't make any money, but a nice pullback to the 50-day moving average. Repligen was that pharmaceutical stock that I thought technically was setting up nicely with a pullback to the 50-day moving average. Harbinger Group got some earnings per share growth. Looks like it wants to break out to higher highs. Triangle Petroleum, great earnings per share growth. This is one of those baby oil stocks. If it can get above here, I think the stock can run, maybe up to 12. Sinovac Biotech, Chinese bio stock, don't know much about it. I believe it's Chinese, yeah. For SARS virus, vaccine rather. Hercules Offshore, this and W&T provide a lot of oil and energy services. Both had pulled back to major moving averages. Both have lots of earnings per share. It too, if it can get above this point, I think has some clear selling ahead. Renesola, one of the baby solar stocks. Solar's certainly been doing well. This one is a turnaround play. Chart looks better than its earnings do. Don't know anything about ShoreTel. I can guess what it is. It is communication probably between shifts. Enterprise IP telephony. Don't know much about it, but we saw communication stocks were strong. This is just a small one. Abner Pharmaceuticals, nice run up, doesn't make much money, or has some revenue, doesn't make money. Form Factor, this once was an expensive stock, must be a turnaround play in the, I thought it was a semiconductor equipment place. Strong group, everything's turned green, pulled back. You know, Ian once taught me a couple of kahunas put straight in my back. So volume, kahunas, getting above the 50. Pullback, ready to run, like that picture. I already showed you Himax was a cheap stock that had a big run last week. Don't know Gain Capital Holdings. 2% dividend, what are they? They are a investment banking and brokerage for small fries. RF Micro Devices. Now, Century Casinos. Casinos have been hot. Take a look at Las Vegas Sands, MPEL, MGAM. You want a baby one that has earnings per share growth. Here's SCNTY. Certainly looks extended. CardioNet is a medical technology company that recently has had some reimbursement wins. It's a small stock, small price, has sales, doesn't yet make money. beautiful chart pattern. Here's when they had their positive signal that they're going to get reimbursed. Silicone Image, another stock that used to be a big player, broke above the 50, doesn't make much money, no growth. I don't like that one, which means it's probably going to go up. Here's a electronic equipment company. When I see a flat line like that, I think somebody probably already bought them out. Mueller Water Products, lower left, upper right, sort of. Good earnings per share growth, not a lot of earnings. Max Linear, breaking out at new highs, doesn't make money. That's enough of these to look at. I think the best were the first couple we looked at. Wendy's is the last one. So from a bottoms-up perspective, there's a number of tools in HGSI. You can look at, simple as looking at these smart groups. I highlighted one today. Another simple one, I'm just going to do a real quick one without looking at the charts, is to go into Designer. This is probably the simplest thing to do. Tools, Group Inclusion Report, and say, Jeff, I don't know which smart group to buy from, so that's cool. We're going to clear everything. We're going to go up top under the smart groups. And I'm just going to pick a bunch of them. I know Bible gap lips are good. I know that pocket pivots are good. Now I'm going to go to Woodward and Brown. I now know that best under 10 is good. I know that best of Woodward and Brown must be good. Best criteria are good. ERG 240 is good. Growth is good. HGS 100 is good. Leaders are good. QEPS is good. Stocks and groups to the upside is good. EPS roll strike near 52-week high is good. I'm going to hit Make Group. I'm going to call this Web Gem Top 10 9.8. Let's hit OK. It's going to find which stocks show up the most in these groups. It's going to ask me if I want to, this is called the top 10. Yes. And here we go. Top 10 stocks, 3-minute analysis are Infoblocks. We saw this one. It looked great. Repligen, pullback. Webcom, leader. Yelp, SupportCom. Here's that Oasis Petroleum. Portfolio Recovery Associates, eHouse China. If I go into my warehouse view, I took 30, not 10, but you can look as many as you want. But look at how many of the ones we like. Blocks, WW, Facebook, eHouse China, LinkedIn, Celgene, Repligen, Oasis, SoFund, Owen Financial. NSM was like Owen Financial. Michael Kors, that Harbinger Group. Take a quick look at this with packaged foods and meat. All right, I don't know anything about this, but it made the best of under 10, and I sort of poo-pooed it. Nice up run here. Again, I wasn't that excited about the earnings. All right, so last comments then. So from a top-down view, top-down approach, there's no better program the way that they do the industry sectors and ranking modules. But it also works from a bottoms-up. It doesn't matter if your stocks, if your growth, if your value, if your ETFs, the program works. And on that note, I will say thank you and good night. Have a great week trading. Enjoy football. It's football time. And go Falcons. Good night, everybody.